In today's video, John breaks down the market using technical analysis, how short-term patterns correlate to long-term movements, and why the election could inject some surprising volatility ahead. Listen up. For those serious about becoming successful, consistently profitable options traders, now is the time to build skills in technical analysis, market analysis, and applied volatility to get those results. We have multiple memberships, starting with our Go membership that teaches rules-based trading and our Pro membership that teaches more subjective trading. For more information, go to lockeinyoursuccess.com/memberships.
One of the topic for today is going to be news related, and one of the reasons we want to talk about that is because we have the election coming up, and there's going to be a lot of uncertainties. We don't necessarily know where the market's going to go, but we can tell what the implied volatility market in general is thinking, and I think that's maybe a good topic for today. First of all, last week on the SPX, we were biased to the upside. I think it was, let's see, this is Friday, Thursday, Wednesday, Tuesday, Monday. So we had this little short-term pattern play out. We had a bullish breakout of that on Friday. That bullish breakout failed on Wednesday. The failure did not reach the new low. Then we gapped up. And then on Friday here, we had another bullish breakout. So this breakout looks fairly identical to last week, except it's just kind of on a larger scale pattern. If we go into the short term, and again, we're just kind of talk about what happened a little bit here. If we go into the short term or into the hourlies, we had this essential cup and handle pattern here playing out. We had kind of arguably on the hourly, a short-term false breakout, but I'm not really going to put too much merit into that in the hourly because I'm looking at daily closes. We had this here. We had a failure of our little cup pattern here, and then we dropped down. Typically on a failure, right? So we're just talking pure technical. Typically on a failure, you're going to see a retest to the bottom. That did not happen. We reclaimed that. We had another breakout, which failed. I think this was, let's see, this was the Friday before. We had another breakout on that Friday. That breakout failed here. On this candle at 12:30 on, looks like Monday, or is that Tuesday? No, that's Monday. On Monday, that failure, typically you're going to see a move down to here or lower, and actually even down to here. You can see that failed. It hit a higher high. So this is a failure that didn't follow through, breakout that didn't follow through, a failure that didn't follow through, a breakout that didn't follow through, a failure that didn't follow through. So you can see in the marketplace that the traders are uncertain of what's going on. And like if I'm looking at this in isolation, they're being pushed around by news. If I understand there's a news event going on, then what I really should be doing is really shouldn't be trying to call the market from a directional standpoint. I should be trying to understand what the traders are thinking based on the news. Knowing that there's a news event on, if I'm watching this technically, that's what I'm thinking it's breaking levels. It's not following through in either direction, right? So that basically puts us in what we would say a chop event. But if I understand, like I say, I don't really pay attention to news, and I don't pay attention to the news, but I'm aware that there's a news event on the table, right? And if I'm aware of the news events on the table, I'm more concerned or more interested in how the traders are reacting to the news event and whether or not the traders are right or not. So here on last Friday, I get a breakout. I had a breakout failure on Monday. And this is on a short term, right? So this is the other context. I'm on a short term context. Longer term, this movement may make complete sense. Short term, maybe it doesn't. But short term, I'm kind of watching what the traders are doing. And I can't be overly surprised that I break a technical level on a short term chart when I know there's a known news event coming out. Basically, we come down into here Monday, Tuesday. I'm kind of asking myself, how are the traders reacting to this? And then Monday, the news is leading up to the news event, they're bullish. Leading up to the news event comes out. Are they bearish? Not really, right? The market sold down, but we didn't break any lows here. Then we bounce and we come back up into midpoint. And then Friday, the news is out, the charts shift bullish again, right? So as of right now, well, first of all, if we go on the daily charts, my thought last week was the charts are bullish. This bar here, Monday, let's zoom in. Charts are bullish. We have a cup and handle pattern that's set in on a short term here. We had a breakout. Charts are bullish in that time frame. Also at a resistance level in a longer term time frame. Our longer term time frames are always more significant than our shorter term time frames. So we have a short term breakout into a longer term resistance level. We had this play out Monday here. We had a pullback off of our resistance level. That's normal, right? That's normal on a daily chart. It's a breakdown on the short-term chart. This is normal on a daily chart. That is my point. Because if we're looking at it in this context, and context is everything, basically what happened here is in the long term, we have a price pattern. We have a price pattern target. We had a essentially exceeding a price pattern target on our shorter term charts. We leveled off. We came in. We broke down back into price pattern target. I have a topping pattern in blue. The topping pattern, price pattern target, as soon as this breaks down here on 412, is here. Okay, so hopefully everybody sees that. This is my primary target, in this time frame. This is my primary price pattern. This is my primary price pattern target. I stalled a little bit there. I broke out. My expectation at that point is the market's going to continue up. But a lot of times what it'll do, it'll come back, it'll retest the top, and it'll continue higher. We broke down. That sets in a short-term price pattern target here, where our expectation is the market comes down to that price pattern, kind of ties in with a support level. We get a bounce. We get a bounce to where? Our minimal bounce is expected to be back to here. Again, this is kind of a to-be reversal failure too, so we want to be aware of that. A lot of the times we get a peak out and a pullback where we have an expectation of the market going pretty much right down to here. This bounce here is the trader saying, oh, wait a minute, no, that's probably not going to happen. If this is a true to-be reversal failure, our expectation would essentially be almost straight down. This bounce here is like we're putting the brakes on. Our expected bounce is to here, this zone right in here, on the longer term and based on our price pattern target. We pulled back off of that, which is normal, right? We're gonna pull back off of this a little bit. We set a higher high coming into Thursday. That is again bullish. We broke out of that high on Friday. I was talking to somebody on Wednesday. The market expectation here, based off the news, is that the market's going to have some caution coming into the news. That's fine, right? Tuesday, Wednesday, this is caution. This, by the way, if we're looking in here, is about midpoint of here. So if I go into 150, this news event coming into the news event came right down into the middle. So if I'm forgetting about what's going on in the very short term and paying attention to what's going on in the macro a little bit, right? So sometimes you can't see the forest through the trees. You have to back up a little bit. So come into here. This is the zone of where I would expect maybe a decision point to go where they don't know what's going on, is going to be right into here, right? I can go down in my Fibonacci levels and I can make the zone by just kind of putting in these two guys if I want to. But this is a uncertainty decision zone. Off of that decision, they bounced up and we cleared this 200%. That's bullish, and you expect a gap up in the market coming into the open today based on that information. Also, if you look at implied volatility, our implied volatility also dropped out a lot on Friday. And that's also, and our skew curves went more bullish. So everything here is telling us that the market wants to go up off of this. That said, again, in our longer term macro environment, where does the implied volatility think the market's going this week? Well, that comes back to our, right, it's about putting everything together. That comes back into here. So the implied volatility market, let me go in the hourlies to see if this is a better demonstration. This is how this is all playing out in the hourlies, right? We had this move here. This is our most predominant level. And again, this is a bit of a range, but our most predominant level on the longer term is this 5100 number. We gapped over that. We closed higher than that, closed higher than our swing highs, bullish, bullish, bullish on our short-term charts. Implied volatility market, our weekly range is here. Right, this is our point range to the upside in green, our point range to the downside in red. Which level matches up best with the technicals of what's going on in the market? In other words, the implied volatility market, or the traders that are creating the implied volatility market, basically they're paying attention to technical patterns and news events in the combination of that, and they're showing us their expectation of how much range is likely to take place in the market over the next week, and they're using technicals, a combination of technicals and news to do that. What are they thinking? Well, I can come in here and I can say, from a technical standpoint, does the up move make more sense, or does the down move make more sense? If I come up here and I say, well, let's see, this is probably the most predominant point on our chart. It would probably be like right here on our short-term chart. And I'm going off of closes, right? So I have a close here. I have a lot of closes right in here and opens right in here. I have, right, I'm seeing this here. I'm seeing this, the average of these consolidations of moves. I'm seeing where the gap up supported itself on our short-term charts. And this is the most predominant level. And this lines up exactly with our 16 delta move, or it's between our point value and our 16 delta move. Always also coincides with this level here, right? So we earlier decided this was a very important level on the charts right in here. Lines up pretty much perfectly with that. To the downside, we are lining up with the swing lows. The IV move is sort of coming into the bottom of this gap here. Things seem to make sense from a price pattern standpoint that we come up into here. That move makes a lot of sense to me technically. So it's also fairly probable. To the downside, this move here seems a little mild. I mean, realistically, if I'm thinking technically, if we break down off of the pattern, where should the market go? It should go at least to this bottom here. Right? It should come all the way down into a breakdown of this level. Right? So it goes back to what the market should and shouldn't do. Let me mark this level down. A breakdown, we'll just say of here. Well, we'll use the white line. A breakdown of this level to the downside from a technical standpoint should bring the market all the way down to here easily, maybe even a bit further. Right, that would be a technical concern. This implied volatility area to me doesn't really make a whole lot of sense. This one makes a lot more sense than the other one. Combine that with the fact implied volatility has dropped coming out of this move on Friday by quite a bit. Our technical pattern has broken. They're less concerned, in my opinion, okay? They're less concerned about a down move because technical failure should bring us here. They're not really concerned about that on multiple levels of what's going on. My thought thinking that the market is here. This is the where I believe, based on the evidence that I have, that the implied volatility market is going. Right. Again, this goes back to taking news events into consideration. Now, I'm not trying to predict the news event. I'm not trying to say if it comes out a certain number that the market, right, was going to go up a lot or down a lot. I'm letting the implied volatility market telling me, or the price action, a combination of the price action and the implied volatility tell me where they believe that the market's going. Then I can decide if I think that's correct or not based on things, but I'm not making projections about what the market news event means based on the news event itself. I'm letting the price action and the implied volatility in the market tell me what they think, because they're a lot smarter than I am. They have a lot more information than I have. They have right. They have control of the market. They have the information, and I'm letting them tell me what they think. Then from there, I can tell if they're surprised or not, because realistically, and I can tell that early because I have my daily ranges, right? So I have my daily range that comes into here. Okay, my daily range goes right into my level, right? That makes perfect sense to the downside for a bullish move. The market thinks that for the day, we might get a move to support this area here. That makes perfect sense to me. That's not bearish. That's just a retest of a support level. That's what it thinks. Okay. It also thinks that we might get a move to here. That makes sense technically, right? Everything lines up with that. On a weekly range, they think that, I think they're discounting this move. I think they're saying no. Does it make sense technically? Yeah, it makes sense technically, but if I get a breakdown of this, realistically, that's a failure, and the market should go here from a technical standpoint. They don't think that's going to happen. It doesn't mean it won't happen, but they don't think it's going to happen. And I know they don't think it's going to happen. That puts the odds that the market's probably going to go up. One of the things I'm paying attention to, where do they think it's going to go up to? I have a head and shoulders breakdown line here, right? This line here, which extends out to here. They believe, right, that we're going to come up and we're going to retest the backside of this pattern breakdown that we had. Everything's lining up perfectly for that during the week, right? So Friday is here, right? So just so we know, Friday's here, and by the time that happens, this line's going to be right in the middle of this range. This is the move they're expecting for the week. Again, this isn't bullish long term, but they're bullish for the week up into this level. I would expect a negative reaction off this level, probably about 30 to 50% of this move, right? So whatever this move is, I can calculate it out. 50% of it's right in here, right in our daily range, right? Right now, 50% of it's into our daily range right now. 30% of it's a little bit less than that. But basically our primary support level that we're dealing with off of that is probably going to be here. Also notice this coincides with this here. This is a level where the market's probably going to back off of, and the implied volatility market is confirming this 100% for the week. So if we get up here into the week, we're probably going to get some sort of retracement off of that. It's going to be a bullish retracement. It's not a reason to flip directions, but we do have our longer term here that's coming into play that we kind of want to be aware of. And let's see. What is that? That's right here. Okay, so this is basically our head and shoulders pattern that we broke down from. This is the area that we're watching. Let me clear drawings here. This is the market scenario that the implied volatility market is expecting. It's expecting, possibly a retest of support, breakout to the upside, eventually of this daily range coming into the backside of this. And then from there, they're not expecting this to blow through this. If they're expecting this to blow through this especially this week, the weekly range would be up here. The weekly range is not up here. The weekly range is down here. This is the move that they are expecting from an implied volatility standpoint for the week, and then probably some sort of a reaction or a stall here. And it could actually react back to here again, because even a reaction to here is still bullish. This could be our bullish move, and then unless things shift in the market, it'll probably come back up and retest these highs. Right? That's what this price pattern right here is telling us, is that we're going back to these highs. The implied volatility market is kind of agreeing with them, but not this week. Now, if we get a very big shift of an implied volatility that turns bearish, and we do the same analysis next week with the new information that comes out, assuming the market does what they expect, then we're going to get, a move down. If the market comes up, let me clear this out, right? So then we're going off if-then scenarios. If the market comes up and breaks this level, I know that that is a surprise to the implied volatility market. They were not as of last week, they were not expecting that. And that tends to be very bullish, because everybody's going to start covering their areas, and the swing high at that point is probably going to be taken out. Right, so if I come out Wednesday and I clear up over that area, I come right up to swing highs, especially if I back down to my weekly range again, which is going to be a support level, this is telling me the market's likely to go higher at that point. Okay, so I'm just observing. I know what the implied volatility market's thinking. I know what the technicals should do. I know where they think things are lining up, and I can use that information to manipulate my positions as I go forward.